Harold, it's a pleasure to speak with you again. Do you believe that tariffs, we know the president says he will do them, do you believe ultimately we will tariff imported oil into the United States?
No, the president sure has that authority. He has a lot of authority. What do you say in his toolbox? He could ban their oil. There's a lot of things that the president could do, and certainly tariffs is one of those, and he very well could use that. So our industry's had a double whammy. First of all, with them dumping their product at a very inopportune time. How atrocious was that timing? And into the market, just as this COVID-19 is sweeping the globe. So we've had COVID-19 plus the dumping. So the president has taken sure action on this, and they promised to stop, and we'll see if they do it.
The Saudis have done something unusual, Harold. Yesterday, they delayed announcing their selling prices for oil for the month of May. Effectively, maybe a feather out there, some kind of peace offering. Did the president indicate that he believes that the Saudis and Russia can make up their differences and that U.S. producers will also come together and we will be able to get a 10 to 15 million barrel per day cut done globally?
Absolutely, Brian. I think their numbers are exactly right. They've done the math. They knew that between the Saudis and Russians, that cutting 10 million barrels was exactly, we've had a 30 million barrel demand cutback. That's what's happened. And so if you took their production together, 21 million barrels, and multiplied by 30%, that's 7 million barrels, plus the 3 million that recently added, that's 10 million barrels. So the rest of OPEC cutting another 5, they knew the math, and that's exactly the numbers that they should cut. So they're right on, and I believe they'll make those cuts. So they're going to have to shut in. We know that because there's not storage capacity in the world to handle it anyway.
Hey, Harold, it's Carl. Once there's some kind of resolution on imports, on Russia, Saudi, how do oil companies domestically think about debt differently? How do they keep it from being a key point that makes them vulnerable into the future?
Well, we are vulnerable into the future, and it's something to be considered. And, we all have some debt. Most of us do, at least. And so ours is out 2.5 years almost to the next tranche. But, we all have some debt that's out there. We hope this is long gone before that comes due. But it's something to think about. We need access to the financial markets just like we've had in the past. And so we need to cross that bridge, Carl.
Harold, this is Morgan. I wanted to get your thoughts. You just touched on the storage piece of this. And obviously, oil is in contango right now. So for those producers that can get their hands on storage and keep it there for longer term, that does seem to be like a very viable option right now. But as we see that capacity fill up, the U.S. government offering the strategic reserves, I think 30 million barrels worth of capacity. Is that going to do enough to help alleviate the stresses, at least here in this country?
It won't be enough. But Morgan, you touched on a very important point. I think that's certainly good that DOE is doing that. Leasing that out to the industry is a very good solution here for a little bit. That's 89 million barrels, that's less than a week's production. So operators are shutting in production. Don't get me wrong. We're doing it. Every operator is cutting back production quickly. And so we're going to have to, and that's just what we do.
Harold, it's Brian again. Sir, you talked about a 30 million barrel a day demand cut. We're talking about 10 million barrels a day in supply cuts. That's still an additional 20 million barrels. Outside of the SPR that Morgan just referenced, how soon will we run out of oil storage in the United States? And do you believe that negative prices. In other words, you pay me to take your oil will come if we reach that point.
You know, Brian, that would be the case if people didn't have the ability to shut down production, but we do have, and, you know, we've done that before. We did it in 2008, 2009. We've done it at other times when demand was low. So that's what you do. You take it offline, and, yeah, storage will fill. Might take 30 days to fill it, but it gets full quick. And so you just take the pressure off the purchasers and start shutting in production and take it offline, and that's what we all do as operators. So that's the way we manage through this.